Critics of Tesla have claimed that the company was a complete bust in Q4, but they failed to see the bigger picture. We have every reason to believe that this is the quiet before the storm, a massive 300% increase in Tesla's stock price, and the company is doing as well as, if not better than, expected. Please hit the like and subscribe buttons before we arrive. Tesla just released these figures, despite the fact that numerous analysts have criticized the company's Q4 production and delivery data for not matching Wall Street and other financial institutions' consensus. While the market was down about 8%, Tesla saw a 40% increase in growth from the previous year. It appears that investor Brett Winton of Cathie Wood's ARK Invest is right when he says the automaker's Q4 deliveries were not a bust. According to his predictions, the majority of the auto market will be made up of electric car sales over the next 5 years. By 2027, there will be about 60 million electric vehicles sold, with a significant share coming from Tesla. Elon Musk's controversial actions contributed to the decline in Tesla's stock price last year, but the automaker is still concerned about the demand for its cars. Some investors have hypothesized that Tesla's recent price reductions for its EVs in China and other EV markets may be the cause of the company's demand issues, especially in the crucial Chinese market. By the final 3 months of 2022, we have been fully informed on Tesla's advancements. According to Tesla, the number of vehicles delivered rose by 40% to 1.31 million, while production surged by 47% to 1.37 million. But according to a FactSet compilation of analyst predictions, Wall Street was anticipating Tesla to announce deliveries of about 427,000 units for the year's last quarter. Commentators have noted that the revelation of Q4 production and delivery data has shown the declining demand for Tesla automobiles. However, Brett Winton, head of research at ARK Investment Management, says that Tesla's Q4 results are groundbreaking, not a mistake. He continued by saying that the stock price might reach $400 this year if the next quarter saw better production rates. Tesla enjoyed a record-breaking fourth quarter, even though the Shanghai factory in China saw a decrease in production. This was despite the fact that Tesla had informed employees they may start their break early and had canceled the morning shift at the factory. The most productive Tesla production facility, Gigafactory in Shanghai, has evolved into the company's export hub as it builds cars for markets throughout the world, particularly Europe and Asia. Thus, a production halt would have had a big effect on output in 2022's fourth quarter. But the automaker's February China stats are in, and they verify that the Shanghai Gigafactory continues to produce an astounding 600,000 cars annually. Brett Winton, however, thinks that production, not demand, will determine whether Tesla meets its growth target. This is true even though Tesla's demand may be faltering, because EV customers haven't yet realized that part of the reason they bought their cars was the tax credit. Considering the numerous price reductions Tesla is making in the majority of its markets, this will soon pass. Because of this, purchasing the car could end up being less expensive than waiting for a different incentive or for Tesla vehicles to meet eligibility requirements. Deliveries of Tesla vehicles are no longer a reliable gauge of the company's success. Rather, they are merely one aspect of the company's financial performance. Vehicle mix, sales price, and exchange rate are just a few of the variables that might cause the bottom line to fluctuate in either direction. According to Winton, Tesla is leading the industry by 3 to 4 years in the shift to electric vehicles, and the automaker will keep cutting costs as it ramps up manufacturing, rolls out new models, and launches additional goods in the years to future. Thus, the business might soon be able to sell the Model 3 alongside every vehicle and item it manufactures. The automaker is discontinuing production of a vehicle that will cost about half as much, but the project has been delayed and might not be completed for a few years. Musk said in October 2018 that the next generation platform will only cost half as much as the Model 3 and Model Y, which has raised a lot of anticipation for the new one. Musk has said that the EV will be produced in far greater quantities than the Model 3 and Y, even though the precise delivery date is yet unknown. It will significantly surpass the manufacturing volumes of any other Tesla vehicle. The usage of manufacturing innovations like GigaPress, which cast huge to see parts in one piece, is to blame for this. Tesla has already started preparing for it. The business is scheduled to present the new car platform to investors on March 1st. In a press release, Tesla stated that during the 2023 Investor Day, which will be streamed live from the company's Gigafactory in Texas, investors will be able to see the most advanced production line in the company's history and learn about Tesla's growth strategies going forward. Additionally, the business announced that it will talk about capital allocation during the Investor Day, possibly bringing up Musk's stock repurchase plan that he first unveiled in October. As Brett, the Tesla bull, has previously stated, innovation may provide a substantial competitive advantage for businesses. According to Winton, Tesla will succeed in setting the standard for the EV market if it is able to produce this low-cost EV. Also emphasized were the parallels between investments in new markets and present-day innovation. Winton believes that Tesla has a lot going for it in the upcoming years, which might eventually increase the company's stock price and demand. If driving technology is mastered, he believes Tesla will see a revolution in the industry. The opinion that Tesla stock is currently cheap is shared by Wall Street veteran and current bull Gary Black. Investors are naturally concerned that there may be less demand for Tesla's products, even if the present uproar has nothing to do with the company's operations, due to price reductions in a number of markets and the stocks. Subsequent increase on the chart, investors have lost faith in Tesla. However, there is still a long way to go before the organization achieves the anticipated levels of success. Tesla is scheduled to release its financial results for the fourth quarter and full year that ended in December 2023, following the conclusion of market on January 25, 2023. Even while it is optimistic to expect higher production from Tesla in the upcoming month, it is crucial to remember that the business is probably planning to reduce output in China, so the current observed decline in demand may not be totally unfounded. Being one of the biggest marketplaces in the world, Tesla is gradually heading toward an even higher rise in vehicles in use at the end of the quarter as a result of regionally hidden manufacturing enhancements that are soon to come. Notwithstanding recent failures, Tesla should soon be able to create more than 1 million units annually at the Shanghai factory as a result of ramping up operations. Across all of its factories worldwide, the business might be able to achieve even greater production rates. Consider the Tesla Giga Shanghai. Tesla Giga Shanghai is getting ready to ship cars and is rapidly ramping up production again. Customers were taken aback by the news of Giga Shanghai production stoppages that surfaced late last year as the facility was overrun by delivery trucks and haulers. The carmaker explained that the stoppages were due to annual production light maintenance in line with Tesla's customary end-of-year production and delivery pushes. While this repair was done, workers could relax, according to a recent video posted by drone operator Wuwa, who has been tracking Giga Shanghai's development for several years. Tesla is returning to full production pace after the line upgrades and optimizations. It appears that Tesla is increasing production and manufacturing to get back to normal before taking its purportedly planned January 20th to 31st break for the Chinese New Year. A report states that Giga Shanghai would be open from January 3rd until January 19th. These dates have not been verified by Tesla. Mua's latest video makes it clear that Tesla intends to make the most of the operating days in January. The plant is bustling with activity as workers start producing Model 3 and Model Y all-electric vehicles, but what really caught my attention was the sheer quantity of vehicle transporters parked outside the building waiting to be loaded with finished automobiles. Wua, a drone operator at the Giga Shanghai plant since 2019, provided some insightful remarks regarding the quantity of haulers on the factory's grounds. That pretty much covers everything in this video. Do you concur with this evaluation? If so, do inform us in the space provided for comments below. While you're at it, give Tesla a rating. Remember to click the notification bell and subscribe. We appreciate your time, and we'll see you in the next video. Music.